I think it depends on your, again, if you're buying that Class U or Class H, that's going to mitigate some of your performance. But talking just the unhedged stream for now, on the mineral side, we think, because our NAV fee is about 1.25%, I think the market, we don't know where the market ultimately settles. Right now we've got expectations where our conversations with producers and with investors, things start to clear. The non-op space, I would say, is probably a PV 12 to 14% on the PDP, where we can give you, PV 12 for your PDP, or PV 12 to 14, depending on the particular package. And if you take out fees, costs, underwriting, closing, that's about a net PV 10 to 12% to the investor. And again, that's not a cash yield. The cash yield's much higher, but that's sort of a discount rate, if you will, that's familiar to the oil and gas space of performance. I think, and now so that's at the asset and fund level. There's additional leakage, sort of in a second derivative, to the extent you're buying through a broker dealer, or you're buying through your RIA, or you're buying direct through the website. All those have different components to them that we don't have a lot of control over. What does your investment advisor charge you? That RIA is generally they're charging you an AUM fee on your stocks, your bonds, your real estate, whatever assets they're managing. Broker dealers, it's very transactional. Even the wirehouses like Schwab and Fidelity are going to charge you, 3 to 6% for their broker dealer affiliations. So it's there's some leakage depending on which channel you acquired through, but for the most part, our rule of thumb is, we can offer a producer 12% discount rate, and we can offer the investor a 10% discount rate, and that gap covers most closing costs. Interestingly, the mineral space may actually come down from that because there's no operating leverage through costs. We think that may be closer to that 10% range to the investor, and 10% to the producer or the owner seller, and 8% to the investor. We just don't know yet, Tim. I mean, we're
well, that's why it's a marketplace, right?
We've got a sales force, and then how these things trade. If gas goes to $9, does that, that in theory, that discount rate should go up just because there's fewer people. Well, I don't know. You would think that goes up just based on price expectations of the curve, but if you're buying on the curve, that's the midpoint. Maybe it doesn't.